Thank you very much. The Afro Latin Jazz Ensemble. Thank you, everybody. Have a good night and get home safely.
All right, happy Friday, everybody. It is July 1st, 2022. We are here at Bryant Park. I believe this is called the Picnic Performances, sponsored by Bank of America. Now, I think we're just concluding here, but I think for about 30 minutes we had amazing music being played. Supposedly this is supposed to last until about 10 o'clock at night. But for some reason they said have a good night, have a good weekend, so maybe it ended a little bit earlier. But anyway, guys, sorry I have been on a little bit of a hiatus. So we haven't streamed Monday, Tuesday, Wednesday, or Thursday, so we took about 4 days off. Had to attend to some work events, but a lot to cover. Lots to cover on the street. You know, we managed to close in the green this week on Wall Street. There's about a 39-point bid in the S&P 500 today. So markets had a pretty good day. You know, we actually saw a little bit of a rally in the bond market after this huge sell-off. So 10-year yield is under 3% once again. We'll talk about that more. And in addition to that, have a couple announcements coming up later on the stream. Let me just put away my phone. Let me just put away my computer and we will get started. But happy July to everybody. Happy 4th of July weekend, wherever you are in the United States. And we will get started shortly. All right, it's good to see everybody. Let's see who we have in the chat tonight. Hey, we have the ABX girls here from the Bronx. Good to see the ABX girl. We have FredX. Welcome, FredX. Long time no see. Happy 4th of July weekend to you. Arum Z is here. Says, hey, Tom. What's up, Arum Z? Good to see you. Sally says, hey, Tom. Welcome, Sally. Welcome back. Karen Alcatraz says, hey, Tom. How are you? I'm doing really well. We are in Bryant Park. Beautiful night out tonight. We are standing directly outside of the Bryant Park Grill. So I think I'm actually standing in a spot where if you guys look at the Bryant Park camera, you could actually probably see me streaming. So that's always cool. Sally is here, says thank you. Tom, Felix is here, says happy weekend. Tom, you as well. Felix, it is the 4th of July weekend. So a long weekend be it that. Today is July 1st, so the first of the month. Now, I couldn't stream because it was pretty crazy on my end. As you guys know, usually for salespeople, the end of the month is a little crazy. Also, the end of the quarter. So June 30th marked the end of the quarter, obviously end of the month. So we are starting fresh today. But the thing is, pretty much nobody's in the office. Pretty much nobody was in the office almost all week. A lot of executives or senior level people at companies tend to take off for the 4th of July week into the weekend. So obviously Monday is a holiday, so markets will be closed. But we had a pretty nice rally on Wall Street. So made some progress there. Not quite out of the woods yet. It was a very low volume week, which is to be expected, obviously, as major fund managers are out of the office. Usually what we like to call the composite operators of the market. So the institutional investors, you could talk about, some of the hedge funders. Usually nowadays, or this time of year, especially going to the 4th of July weekend, they tend to be, in the Hamptons or, at their second summer homes and things like that. So volume tends to dry up this time. We also had the Russell rebalancing, which we'll talk about. Sinjib is here, says, hey Tom, how are you? I'm doing good from Quebec, good to see you. Sinjib, Western Mass Dave, what's up? Welcome. Joe Hernandez is here, always a pleasure to see you, Joe. Happy early 4th of July weekend to you. I see one and only Ruby Falcone. Ruby, good to see you. The Austin Tennis is Tom. Will you be attending the AWS Summit in New York City? I don't think I'm going to be attending that, to be honest. Maybe I'll have to look into that. That does sound quite intriguing, but no plans as of yet to attend that. But the Austin Tennis, hopefully everything is going well with you at Pager Duty. Kathy Lyons says, happy Friday, Tom, and hope all is well. Thank you, Kathy, appreciate it. It's good to be back streaming, but it was also nice to take, some time off. It was nice to take some time off, not gonna lie. Hope you guys were holding up well during that time. But man, look at this. This is true classic summer in New York City. This is the picnic performances at Bryant Park, sponsored by Bank of America. Nigel Dallas says, happy Friday, Tom. Good to see you, Nigel Dallas. Jay Einstein is here. Says, hey, Tom. Hey, the Austin Tennis says, I'll be at AWS in New York City. Would love to take you to Becco. Austin Tennis, shoot me an email if you're around. If I'm in New York City, I am 100% down to hang out. Please reach out. Melee is here, says nice to see you. Good to see you, Melee. The ABX girl says hi and happy Canada Day to our Canadian friends. So you're right, it is Canada Day. So happy Canada Day to all of our Canadian friends. I see Guzman is here. Says good evening, Tom. Good to see you. It's good to see you as well. Beautiful night out in New York City, although it was really humid today. It was extremely hot and humid in New York City. But as you guys know, I am a huge fan of humidity, being that I now reside in Miami, Florida. Sabrina Ferris says, does New York City have mosquitoes? Yeah, it's Central Park. I'd say Central Park has quite a few. Gigi NYC, good to see you. Long time no see, Gigi. G Shep says, hey Tom, do you know that artist Woody Weber? He paints on locations all around New York City. So I've not heard of him, but if you showed me a piece of artwork by him, I'd probably recognize it. But good to see you, G Shep. Hey King says, we miss you and your genius voice, Tom. Thank you so much, King. I appreciate that. Miss you guys as well. It's good to be back on the stream. Beautiful day. Joe says gas prices expected to drop in the middle of July. Yeah, well, it seems like commodity prices are coming down. Another thing that I found quite interesting is that after this massive sell-off we had all last week and the week before in the bond market, and excuse the wind noise, it is a little bit windy here, the bond market actually caught a bid. So if we look at that 10-year US Treasury yield, we are now back below 3%. So hopefully that'll drag down some of the rates for the 30-year fixed rate mortgage. So we had some data coming out of the housing market. I think pretty important data. There's been a lot of people calling for an all-out real estate crash. They're calling for people to start selling their houses in mass, but we're really not seeing that. We're really not seeing that yet. So we just had some preliminary data coming out of the housing market that still shows that demand is rather great for single-family homes, specifically in the United States. And that supply is still at a relative all-time record low. Now, I was reading an interesting piece out of Bloomberg where one of the analysts, I believe the title of the article was called "The Housing Market, the Perfect Storm." And I guess the entire thesis is that as commodities prices are increasing and as interest rates are increasing, single-family home builders are not building as many homes to meet demand. In addition, if we looked 2 weeks ago, we had housing start data, and housing starts in the United States are down 14% year over year. So the reason why this is an issue is because right now the main problem we're running into in the housing market specifically, and now even in the rental real estate market, is that there's just not enough supply. Okay, so even though interest rates are going up and we nearly have almost a 6% 30-year fixed rate mortgage, we do not yet have enough supply to meet all the demand. So we're sort of starting to see this kind of weird divergence where real estate prices are still going up while interest rates are still going up. And the reason why that's strange is because as that 30-year fixed rate mortgage goes up, if we compare it to this time last year, if for the same price home, let's say if you wanted to buy a house $400,000 and you wanted to take out a mortgage, it's going to cost you on average $750 to $850 per month more just to buy a house now, as opposed to buying one this time last year, obviously because of the bid in the interest rate. But that doesn't seem to be curbing demand as much as many analysts thought. Hey, Christopher Trin says, hey Tom, isn't this Bryant Park? Yeah. So this is Bryant Park. They are doing the picnic performances here. So I believe this lasts all the way till 10 o'clock at night. But check out this view of the Empire State Building from inside the park. Absolutely beautiful. Yeah, so Joe Hernandez makes a good point. Says, hey Tom, it's because of interest rates, builders are hesitant to build. Yeah, and I think that's the number one solution to the housing crisis in America, right? Is just we need more building. But as costs go up, you know, builders are more reluctant to build because their profit margins are getting eaten into a little bit. So it's a good point. It's a good point. Fred X says Empire State Building, indeed. Joan is here, says, hey Tom, good to see you. Good to see you, Joan. James says, man, mortgage payments are out of control. I did so much better when I got mine. Yeah, mortgage payments are out of control, but I mean, James, to your point there, I think they're out of control on a relative basis, right? Because everybody in my generation, let's say if you're mid-20s, let's say anywhere between 22, ooh, check out that rat. That's a massive rat. Let's say anywhere between, I'd say 22 to like 28 years old, which I would consider my generation. We're so used to artificially low interest rates. We grew up in a world where money was pretty much free, right? So as interest rates, or as a 30-year fixed rate mortgage goes to, 5.5%, we think that's Armageddon. But, when our parents and, our parents were buying homes, they were having 14% interest rates. So, I think there's supposed to be another act coming on the stage here. I'm not sure, but I want to just give it another minute. I want to see if we could catch some music going on here. I think it's supposed to last till 10 o'clock, but it started at 8:30, but I think it's supposed to last till 10. Yeah, no problem. Yeah, I just don't know the acts. I think if you go on that side, they're passing out like show cards, and it'll tell you the acts. Yeah, no problem. Have a nice weekend. Hey, Carol Williams, what's up? Long time no see. This is good night from Antigua and Barbuda. We are experiencing rain from a tropical wave passing through the island. Wow. Well, please stay safe, please. Style by Christie says New York, $1 slice. Rat, indeed, agreed. Fred X says walks in Wall Street, drinking game. First Empire State Building sighting, definitely a drink. Yeah, and the Empire State Building's looking, from here, probably like a 9.3. I'd say like a 9.3 out of 10. Beautiful night in New York, by the way. I see our pal Western Mass Dave. Hey, Western Mass Dave, good to see you. Happy 4th of July weekend. The one and only Ryan Royal is here. This is the next act is Tom. You never know. You never know. If I was musically inclined or musically talented, maybe, Gregory's classic white on the Empire State Building. Yeah, I think later tonight, maybe about 11. I'm not sure. I think we may only stream for like 2 hours tonight. I gotta see. But it should be the multicolor one last night, I believe. So this is Bryant Park from the other perspective. And this is actually looking over the Steven Schwartzman building. Hey, Soho is here. What's up, Soho? Good to see you. James says, I was surprised at how many rats I saw when I was in New York City a couple weeks ago. It's really changed. Yeah, I mean, I think, you know what? You know which park has the most? Well, I guess, I don't know if it's technically considered a park, but if you're near 59th Street and 5th, right there near the Plaza Hotel and the Apple Store, the main water fountain right outside of the plaza has the most rats by far I've ever seen in my life. But now we are looking at the beautiful, the one, the only, One Vanderbilt building here. And right to the right of the One Vanderbilt is the Chrysler building. Ryan Royal says, love the city lights, all the people during Blue Hour. Hey, Vinny Castellano is here. What's up, Vinny Castellano, as well as Maria Castellano? Hopefully you're doing well. You know, I think I want to head over to Grand Central Terminal today. We haven't been over there in a while. We might as well check it out. But it's good to be back. I took some time off. Had a lot of clients to attend to. Obviously, it was the end of the quarter. So finished the quarter strong. This has been one of the worst quarters for the stock market since the 70s. But we do have some good news. It's not all gloom and doom, so we're going to talk about that tonight. I forget the name of the analyst. I don't have my notes prepared for tonight. I just sort of jumped on the stream real quick after taking some time off. But here's the good news. So it's not all bad news. I know over the past 2 or 3 weeks we've been talking really fear, doom and gloom, but we've just been given the news, giving it like we see it. But here's the good news, and the good news is that usually when the market has this bad of a start, going back to the 70s, we usually see the second half of the year, so let's just call it Q3, Q4, we usually see on average about a 24% rally, broad-based across the major indices. Okay, so that's the S&P 500, the Dow, and the NASDAQ. And I kind of want to sort of take a step back in time. As we've been doing these streams, I think one of my personal favorite streams is the night where we covered S&P 500 historical performance during midterm election years or midterm election cycles. So this could just so happen to be a perfect storm for really good equity returns in Q3 and Q4. We're standing outside of Salesforce Tower, by the way. Also, the Whole Foods is in the basement of this building as we pan all the way up. So usually, going back to the 70s, this is the worst start for the stock market since the 70s. But the good news is usually the second half of the year, Q3, Q4, the markets tend to rally on average 24%. So we could possibly be having that to look forward to. Here's what I think the market is waiting for. And oftentimes, obviously, we talk about the Fed. The Fed is the #1 driver of this market. I think that's pretty obvious. But I think that Wall Street is waiting for this next earnings season to roll around. I think this next earnings season is going to be the most critical earnings season for the market, and I'll explain why. And again, this is super opinionated here, but I think it's important that we cover. So as we've been talking about, it feels like we're in Miami with the muffler noise. So as we've been talking about, a lot of analysts on Wall Street are looking at forward PE ratios. Okay, and historically, as the S&P 500 gets down to about 16 times forward projected earnings, or full year's forward projected earnings, historically that is an unbelievable buy, But as we've been covering on the streams, forward PEs are exactly that. They are a forward projection of earnings of companies. It's not guaranteed that those companies will produce those earnings. They could actually even miss those earnings and have their earnings revised down. So should we have this earnings season roll through, and assuming it doesn't come in as bad as expected, because as we've been covering on the stream from last earnings season, the earnings season that just passed, many of the companies that reported earnings also guided lower or revised their guidance down into the future. So it's very possible that we have this earnings season roll through and earnings actually come in good, and CEOs will come across the board and say, you know, we were a little bit conservative in the previous quarter, but after seeing increased business activity, we are going to reinstate our previous forecast, and maybe they'll even beat and raise. So who knows? I mean, so if earnings come in really, really bad, I think you're going to see broad-based analyst revisions lower, and that could take, you know, forward PEs. So technically, if we think that the S&P 500 is trading at 16 times forward earnings, that could actually be technically 19 times forward earnings now, if those earnings get revised down, which is definitely not good. That means the S&P 500 could maybe even go to as low as 2,900, something like that. So earnings season, I think, is going to be important. Obviously, the number one thing that drives this market is earnings. I guess you could say the Fed too, but it's earnings. Hey, James is here. Says earnings season this time is going to be fascinating indeed. Indeed, it should be. Let's see who we have. Hey, Samantha R is here. Says, hey, Tom. Hey, everybody. How are you? I'm doing good. It's a humid night here in New York, 4th of July weekend. You know, we should be streaming the 4th of July fireworks. We may be in Greenpoint, Brooklyn for that. So stay tuned for that. That's about a 50-50. So it's 50% chance we'll be streaming the fireworks in Greenpoint. So for those of you non-New Yorkers in the chat, you may be able to watch them right here on the stream. Hey, Austin City Limits says, Tom, what do you think about the 5-year not... hold on, my stream is moving too fast. Oh, the note and the 10-year inversion. Yeah, so the whole yield curve right now is flattening. And obviously, when you have a yield curve inversion, that usually signals a recession within the next 12 months. So there was a really interesting comment from Dan Tapiero, which he's a hedge fund manager, formerly worked under Stanley Druckenmiller. So really well-respected guy on Wall Street. And he thinks the Fed is overblowing this. He thinks the Fed is raising interest rates and tightening into recession when the Fed really doesn't need to be doing that, because he thinks the demand destruction that's been going on in the equity market is going to put a stop to inflation. So he thinks that we just need to wait for a couple more CPI numbers to roll through to start to see inflation sort of tapering off or cooling off. Now, I'm not sure if he's right or not. I think it's an interesting thesis, because he says, look, with all of the trillions and trillions of dollars erased from the face of the equity market, that alone is going to cause demand destruction and stop consumers from spending, stop people from buying houses, stop people from traveling, and hopefully that'll put a lid on inflation. Now, I don't know if that's going to do it 100%, but it seems like the bond market is the all-knower and the all tells all. We talk about that a lot on the stream. So whenever you have a yield curve inversion, usually that means within 12 months, you're going to have sort of a recessionary period. We did see that 10-year yield come down though. So this week, I believe the 10-year US Treasury yield is now below 3%. So we've been having this massive, uncontrolled, pretty much sell-off in the debt market or the bond market, in which case the 10-year US Treasury yield over the course of 2 months almost hit, what did it top out, like 3.5, 3.6%? But yeah, definitely something to watch for sure. But here we are standing outside of the Stephen Schwarzman building, New York Public Library. I actually went in here 2 days ago. Very beautiful building. One of my favorites in the city. Hey, flat smacks, as they don't make those buildings like they used to, that's for sure. Agreed. Yeah, I kind of like the old architecture a little bit better. Good to see you, flat smack. Hey, Chris Beeman is here. Says hello to everybody. Chris, always good to see you. Chris is joining us from Arizona. Welcome. Van, good to see you. Hey, Marcelo Gill says, hey Tom, expecting you're well. About the stock market, when will the stock market stop selling off? What's your feeling? Yeah, well, I mean, in all honesty, this week was a decent week for the market. You know, could this be a bear market rally? I think it could be. But again, I think the number one thing we have to look for is that debt market on stocks. And if you noticed this week, what did the 10-year Treasury yield do? The 10-year US Treasury yield actually came down a little bit. So if we understand the mechanics of the bond market, yields move inversely to bond prices, right? So as bonds sell off, rates go higher. And as people start buying bonds, the yields go lower. So this is exactly what we've been seeing in places like Japan, where they're actually instituting what's called yield curve control to sort of try to stabilize markets. But the thing that's, I think, is the problem in Japan is that people are losing confidence in the currency. So what are we seeing to the Japanese yen now? Huge, huge sell-off. Well, really broad-based. I mean, if you look at any sort of currencies besides the US dollar, and a select few others, we've been having a big sell-off. But if I had to call a bottom of this stock market, like if just for fun, I would say that this market will bottom when the Federal Reserve reverses course and signals to the market that they are not going to raise interest rates and they are going to start quantitative tightening. Now, that is a very controversial statement because many people think that the Federal Reserve needs to raise interest rates and needs to unwind the balance sheet, which I agree. I think that they do need to do that. But if we're just talking about speculating on stock prices here, ever since the lows of the 2008 financial crisis, the Fed balance sheet and equities have about a 90% correlation. Okay, so many people said that this is a managed market. So a lot of economists, I think the most famous one who's been calling and sort of pounding the table about this has been Peter Schiff, the CEO and founder of Euro Pacific Capital. He's one of those end the Fed guys. I think you could consider him probably like a libertarian. But if we just want to talk when this market is going to bottom, I'd probably say right around when the Fed starts to do QT. But right now we are in a tightening cycle. Wow, everybody, check out this crescent moon right above the Stephen Schwarzman building and right to the right of the Bank of China. Wow, beautiful here. That's a great shot. Hey, Joan says, I miss New York City, the greatest city on earth. Joan, you got to come back. M. Garcia says, I found an old box in my garage and they are like bonds. 73 bonds, $100 each. Interesting, nice. Very cool. I think I have some of those old savings bonds too. Captain Super says, hey Tom, happy Friday everybody. Hey, happy 4th of July weekend to you too, my friend. Thank you for being here. I see Cayenne Pacific. Mac Jack says, hey Tom, happy Friday. And sunshine after rain. Good to see you. Thank you for joining tonight. Welcome everybody. Yeah, Flat Smack says, love the moon tonight. You know, I was actually in Brooklyn. I think it was last night. Yeah, last night. I went to this hotel, like rooftop type deal. And the moon was insane and the view was absolutely incredible. I believe it was near the Brooklyn Brewery, if anybody's familiar with that. I think it's in Williamsburg. I believe. Hey, William Wilson says, hey, long time no see. Good to see you, William Wilson, and happy 4th of July weekend to you and your family, my friend. Manuel is here. Good to see you, Manuel. So I think we're going to pass EY, everybody. And EY was in the news this week. I believe they were fined $100 million for some unethical practices. Ooh, excuse me, not EY, the other consulting company, PwC, PricewaterhouseCoopers. But anyway, I guess as we're talking about, you know, management consulting companies and accounting firms, EY, I believe, was fined about $100 million for unethical practices and people cheating on necessary exams and things like that. And this isn't the first time. And I think it's interesting because I believe EY wants to break apart the company into two dedicated segments. So they'll have one dedicated accounting section and a consulting section. We'll see how that goes. But yeah, the SEC hit with a huge fine, $100 million. Right now we are standing right under the One Vanderbilt building. Shannon is here, says, what crisis are you kidding me? Everything's out of control price-wise, and we got a president sitting on his hands. Let me guess you're a billionaire and you don't have issues, question mark. Interesting supposition that you would think I'm a billionaire. Hopefully I have a good 4th of July weekend. Hey, we have in the chat Jimmy Anderson says, cheers my dude, happy 4th of July weekend. Good to see you, Jimmy Anderson. Jimmy is the host of the Beer and Bets podcast. Good to see you. Welcome, Jimmy Anderson. Dude is here. George Ramos is here. Welcome, George. Good to see you. Eyeglass Lady. Yes, it's hot out there in California. Eyeglass Lady is extremely, extremely humid here in New York as well. I think it was about 84 degrees today and almost 90% humidity. Crazy. But good to see you, Eyeglass Lady. This is the Chrysler Building. Chrysler Building's looking absolutely gorgeous here. Mike 34 says the city looks exceptionally beautiful tonight. Thank you, Mike. Appreciate it. Brian Suarez says hello from Ecuador. Good to see you. Gregory says 9.6. Agreed. But yeah, I mean, Shannon, to your point, to Shannon's point, because I think that's actually a pretty good comment there by Shannon. So, and the reason why I say this is if you look at consumer sentiment, historic consumer sentiment, we are at all-time record lows. So consumers are more, I guess for a lack of a better term, depressed or less confident in the economy, less confident in their personal finances, even less so than the 2007-2008 financial crisis. So this calls on a lot of economists to ask the question, if we understand that the vast majority of economic activity in the United States comes from consumer spending, and if data is showing that consumers are not confident at all, and to take it a step further, that consumers are extremely worried and skeptical for their personal financial environment now and to the future, and they are not confident about the economy moving forward, what is that going to mean for consumer spending data? I don't know. But if you look at the data, consumer spending is actually up year over year. But that begs the question, are consumers spending more because they're consuming additional products and services, or are consumers forced to be spending more because inflation is out of control? So maybe if you go to the grocery store and your bill is usually $200, maybe now when you go to the grocery store, your bill is going to be $230, right? So maybe are consumers spending more now, not because they want to, because they have to? I think it's a good question. I think we're seeing a crazy divergence here. Beautiful view of the Chrysler building, by the way, tonight. I think we're seeing a really interesting divergence between consumer spending and consumer sentiment. So again, as I said, consumer sentiment is at an all-time record low. Even lower than during the great financial crisis, but consumer spending is actually still near all-time record highs. And a little bit of anecdotal data for you all, the city has been absolutely packed. You guys know I tend to spend my time 50-50 between New York City and Miami, and I have never seen, especially on the weekends, I've never seen the city this packed. I've never seen Miami, such as Brickell, Wynwood, downtown Miami, I've never seen it as packed as it is. It seems like consumers are getting out there and spending, although I guess we'll sort of take the other side of the argument here. And I guess one could say that due to the pandemic, we're just seeing a shift in how consumers are spending their money. So for example, during the pandemic, everybody was spending money on Netflix, ordering in, spending on Amazon, ordering products and services. But now people are spending on taking a trip to New York City, going to see a Broadway show, going out to the movies, going out to dinner, because they've been locked down in their homes and apartments for almost 2 years now. So maybe we're just seeing a shift in consumer spending habits. And that is a plausible, I guess you could call it supposition, because during last quarter's earnings season, when we heard from all the major credit card issuers, such as Bank of America, Amex, JP Morgan Chase, the CEOs of all those companies actually sort of said the same thing, right? They sort of said consumer spending is strong, but they're strong in specific categories such as air travel. They're spending on cruises, they're spending on, road trips, things like that, and more experiences. And maybe that could be, a coincidence, or maybe that could be because of the pandemic. Who knows? But right here, everybody, is the Campbell Bar, which is very, very famous place, also very beautiful. So if you're a business person, or even not, maybe you just want to come to the city and check it out, good place to take clients, good place to come and experience for yourself. G Shep says people are being more frugal, perhaps. Eyeglass Lady says acting/spending like there is no tomorrow on experiences. Yeah, Eyeglass Lady, I've seen myself spend a little bit more money on experiences as well. Like traveling places, I think my airfare spending is probably up a lot since last year. Daryl is here. Hey, what's up, Daryl? Says, hey, it's Daryl from Chicago, Illinois. Always a pleasure to see you, Daryl. Lisa says, we have no choice for gas and food and house prices increases. You're right. Hey, Armando says, congratulations from Mexico City. Great information. Well, thank you for watching. We appreciate it, and welcome to the stream, all of our viewers from Mexico. Stephanie Stanley says, I've been to Campbell Bar. Yeah, it's very nice in here. So we obviously can't stream in there, but if you guys are curious just how beautiful it is in the Campbell Bar, I want you to do a quick Google search, pull up Google Images, and you will be amazed. It is extremely beautiful in there. So if you want to impress a client, take somebody out to dinner, or for drinks or something like that, I think that's probably the number one, maybe top, I'd say probably top 5 places to do it in New York, not gonna lie. Maybe top 5. Yeah, Eyeglass Lady says, hey Tom, how was the wedding? Did you go yet? So not yet, the wedding is next week. So the wedding, I believe, is on the 8th. So it is gonna be out on Long Island. So I do have to head out mid next week. So there will be no stream probably the 7th and the 8th of next week, I think. Oh, we got the bagpipes going. Let's see. Nice. Hey, Roy S. Tom, have you experienced the rising price on airplane tickets? Yes. So usually when I fly from Miami International Airport or Fort Lauderdale to either LaGuardia or JFK, it's usually right around 50 bucks. But now I've been paying anywhere from like 120 to 150. So in some cases up 300%. I think the most I've ever spent on the ticket one time, which was crazy, but it was good because I didn't have to pay for it. One of my clients did. It was about $750 for the ticket. Be it I did book like a day in advance, so. Let's see what comments I missed. Hey, Exploration is here. Good to see you, Exploration. Lisa says people might be out, but I believe they are more careful on how they spend their money. I think you're right. Also, you know, Lisa, to your point, I think this may be a little bit of, maybe it's like a cognitive bias here. Because in a big city like New York, right, and I understand and appreciate that not everybody in New York is wealthy. I get that. But usually the people who are taking vacations here and the people that are, let's say, on business trips and things like that in New York City, they tend to be from higher incomes, right? So, you know, generally speaking, I know that's a huge generalization, I get that, but here's sort of where my train of thought is coming from. You know, I tend to walk around New York City and Miami, so my perspective on economic activity is in places like, obviously, New York City and Miami. Now, I understand that there's more depressed places in the country economically, which could represent maybe a larger portion of the economy, but based upon the little two places that I travel, I mean, I've been seeing restaurants packed, bars packed, everything. But maybe in a flyover state or something like that, or maybe in a local city in upstate New York, it's probably not the same. So maybe it's a little bit of bias there. So maybe not good data. Hey, Bagels and Walks, what's up? Good to see you. Happy 4th of July weekend, Bagels and Walks. Always a pleasure. Roy S., some international airfare tickets have practically doubled, if not tripled. Airline industries might be in real trouble soon. Yeah, so I was actually at JFK, the international terminal, on Monday. And it was insane. I think I posted some pictures of it on Twitter. So if you want to follow me at Walks Wall Street on Twitter, I tend to post a lot of financial information, a lot of financial stuff there. But check it out. I mean, it was insane. It was absolutely insane, the amount of international travel or travelers coming into the United States, which I think is good news, right? I think it's good news. But, you know, Roy, to your point, hold on, I'm going to show you guys Grand Central Station. But Roy, to your point, I mean, the ticket prices have doubled, if not tripled. Hey, Penelope is here from Tennessee. Good to see you, Penelope. I trust you are well. Lodi is here. Says it looks like a beautiful night in New York City. Thank you, Lodi. It is. Right now we are walking through this corridor. We are going to do a quick lap around Grand Central Station. We haven't been here in a while, so I want to just do a quick lap around. Infinite Sky says, I think most people who are traveling now are the ones that already had the budget to do so and had to cancel / reschedule due to the pandemic. That's actually, I'd never thought about that, actually. I never thought about it like that. I think you may be right. I think you may be right. So maybe this is just like the initial wave of backlog, right? And then it should die down after that, potentially. Hey, Bruno is here. Says hello from Brazil. What's up, Bruno? Good to see you. Thank you for joining the stream. Hey, Crypto Revolution says hi from across the river, walks on Wall Street. Good to see you. Which way across the river? Are you across the East River? Or are you across the Hudson River, in which case you would be one of our good friends from Jersey. Good to see you. All right, guys, so we have made it to Grand Central Station. Ah, Hudson River, nice. Well, thank you for joining. Have a good 4th of July weekend. We are now in Grand Central Station, where you could take the Metro North to upstate New York. I also believe Connecticut as well, if you take the New Haven line. I think that's what it's called. Let's check out the travel scene here. It should be... Well, although usually the Friday before the 4th of July, depending on what day the 4th of July lands on, people tend to take like a half day off. Hey, Kat says, hey Tom, our cruise was canceled in 2020 and we didn't get to go in 2021. We're going this August. Money was already saved up for the trip. Okay, yeah, so maybe this is just a lot of the pandemic sort of travel. So a lot of the travel that was already planned during 2020 that unfortunately couldn't happen due to obvious reasons, is people are starting to travel now. I get that. Interesting. But hopefully you have a good time on your trip. Hopefully you have a good, safe trip. Yeah, taxi cabs is the Apple store is there as well. You're right. So if we look at the ceiling at Grand Central Terminal, you'll see the mighty bowl right here. GW says happy Canada Day to all of our Canadians. Indeed. So I believe Sanjib and Mark Davis are our 2 Canadian viewers. Also NNB 045 I think is from Canada as well. So happy Canada Day to everybody, all of our Canadian viewers who walks on Wall Street. Good to see you. So I think right here is my favorite shot inside Grand Central at the American flag right here. Hey, I see Daniel G from Buenos Aires, Argentina. Good to see you, Daniel. I trust you're well over there in Argentina. Bagels and Walks says, meet me at the clock. Hey, Palmetti says, hey Tom, glad to see that you're good. Yeah. So I took some time off. I had a very busy week. Obviously, it is not only the end of the month, but it was also the end of the quarter. So June 30th marked the end of the quarter. Today was the first day of the quarter, but pretty much nobody was in the office, to be honest. You know, July 1st and then going into the July weekend, the 4th of July weekend. Just a quick update for everybody. TPR says, I'm Canadian too. Hello from Montreal. TPR, happy Canada Day to you, my friend. And thank you for being here. But just a quick recap tonight, everybody. I'm going to keep the stream a little light. You know, we're just getting back into the swing of things. But we did have a rally week on Wall Street. It was a very volatile week, I should say. Interesting action this week in the bond market, I will say. So we did have the bond market at least stop selling off and catch a little bit of a bid. That 10-year U.S. Treasury yield did come down a bit. We are now under 3%. So we had some stability there in the bond market, but we did get a bid in the stock market. Now, you know, the S&P 500, the Dow Jones Industrial Average, and the NASDAQ are still sitting well below their 50-day and 200-day moving average. So this is still a serious bear market out there. And I do not think that we'll be able to call a bottom until the indices break above their key 50-day and 200-day moving averages, and we get some clarity from the Federal Reserve in relation to their massive balance sheet unwind. So there's many notable hedge fund managers on Wall Street, money managers on Wall Street, that think the Federal Reserve is actually overdoing it, and that all of the demand destruction from the equity market rout that we've been having, that has wiped well over $3 trillion off this market. Now, I'm not too sure that that is going to be the case, but I think it's an interesting thesis, right? You know, so as Americans see their balances in their retirement accounts, which could be anything from a 401k, an IRA, so an IRA or a Roth IRA, as Americans see those balances going down, you know, maybe that could influence future purchasing expectations. So if you had $1 million in your stock portfolio and now it's down 30%, you know, maybe you're like, okay, I'll hold off on buying that car. I'll hold off on taking that trip, and hopefully that'll cool off inflation. So there's one hedge fund manager in particular, Dan Tapiero, and obviously we talk about him a lot. He used to work directly under Stanley Druckenmiller, who is really renowned as one of the greatest investors of all time. He's calling for that. He says the Federal Reserve is actually doing too much to help fight inflation. They may overdo it, in which case we will enter a recession, in which case the Federal Reserve would be tightening into recession. So that is going to be called a hard landing. But the Fed Chair Jerome Powell did signal that it is still a possibility that we may have a soft landing. I definitely don't think that that's going to be a possibility to have a quote-unquote soft landing. But then again, I think the mainstream media paints the picture that all recessions are bad. But if you sort of understand just basic economics, I think recessions are very necessary to sort of rinse and repeat and clean out the unprofitable businesses in the economy, and unprofitable businesses need to go bankrupt. Not everybody can get a handout. So yeah, Ryan Royal's like tiny police car. So usually the MTA and the NYPD will patrol train stations and the like with those type of miniature cars there. Wow, the wind is really picking up. So this is directly outside of Grand Central Station. Hey, MBA Elias says, hey Tom, I hope you had a good week. What a crazy first quarter for the Fed and Wall Street, indeed. Yeah, I think this was the worst quarter on record. The worst quarter on record for the stock market since the 70s. But here's the good news. So MBA Elias, to your point, here's the good news, or the potential good news. So historically, whenever we started the year off this bad, the first half of the year, whenever we started it off this bad, usually in Q3 and Q4, the markets tend to rally on average of 24%, which is significant. So couple that with midterm election cycles that are going to be going on. This is actually not a historical anomaly. A lot of people think that this has never happened before, but if you study market history, this is actually exactly what happens all the time, right? So usually during midterm election cycles, as we've been talking about, usually the market is either down to flat in Q1 and Q2. And then once we get the results from the midterms, that's when we have that tail end market rally. So I think we could potentially have a positive rally in Q3, Q4 of this year as we get midterms out of the way. So I wanted to read a nice comment that I just saw by Here Now. Here Now says, like crypto, no handouts for the Wild West. Yeah, so I want to talk about that for a second, because when we talk about market mechanics, many people say that as the crypto markets are blowing up and people are losing a ton of money, that's sort of not the norm. But that's exactly how markets are supposed to function if you think about it. The bad actors are supposed to get totally wiped out and go bust, right? So if we talk about like the Celsius network, the other one, Luna, Terra Luna, in the cryptocurrency markets, there's no Federal Reserve to bail you out, right? It's true free markets. And if you think about it from like a liquidity standpoint, the markets are actually dealing with this correction better than the equity markets. And the reason why I say that is because look at 2 weeks ago, I think it was 3 weeks now. It could have been 2 weeks. You could fact check me on it later. We took a week off streaming. But I think it was about 2 weeks ago, the MBS market, or the mortgage-backed security market, went absolutely no bid. Okay, went absolutely no bid, which is a huge concern. So that is a huge liquidity concern. But if you think about it, in the cryptocurrency markets, when it is true free market system, those projects, or whatever you want to call them, that I think most of them are securities, in which case you should never touch them, but they will go to zero and they will not get bailed out by anybody. And what happens is you'll start to see, as we talked about a couple streams ago, is that you'll start to see other firms buying these depressed assets for pennies on the dollar. So we briefly talked about that Three Arrows Capital. What was that? We briefly talked about that Three Arrows Capital going belly up, and you're going to see a lot of other funds here. I believe even FTX will start to come in here and start to buy those depressed assets from them at pennies on the dollar. And that's how things are supposed to work out, right? You know, as we saw in the 2007-2008 financial crisis, you know, the Federal Reserve came in here and backstopped the banking system. And that's why you had all of those Occupy Wall Street protesters, if anybody remembers that. I remember that quite well. It was down at Zuccotti Park, and all the Occupy Wall Street protesters were upset because we were using taxpayer dollars to bail out all the major investment bankers who were making, you know, hundreds of thousands of dollars when everybody else got to lose their job. So I understand the cause for concern there, but I think it's just a good I guess comparison. Hey, War Walker's here. What's up? War Walker's joining us from Miami, Florida. Good to see you, War Walker. Welcome. Rock is here. Welcome, Rock. From Russia with love says it's financial warfare. Good to see you. JM says FTX is acquiring BlockFi. Yeah, I think they're buying them for like pennies on the dollar too. So also, Three Arrows Capital had a lot of private equity investments that are pretty much worthless now. But I also believe FTX is going to be picking up some of the private equity type investments there as well. Hey, Jewel Mar says, yes, meet me at the clock. Good to see you, Jewel Mar. James says, sharp investors will spot the value and scoop it up. Rock says, Q4 rally followed by a big bear market. Yeah, maybe potentially, you're right. Potentially. I mean, at the end of the day, it's going to depend on earnings. If earnings estimates get revised way down, and then this earnings season comes back horrible, look, let's say if every company bombs earnings, like I'm talking total miss, then analysts, you're going to start to see analysts downgrading all these stocks. They're going to get hit, and these things are going to get pounded. Because right now, I believe the S&P is trading at 16 times forward earnings, which is actually it's a decent price to buy the market here. Here's the caveat, which I've said over and over again. Forward earnings are forward earnings, so that's not guaranteed. These companies could bomb earnings, and estimates could come down. So the E in forward PE, earnings estimates could plummet, in which case the real true forward PE on the S&P 500 could be something like 19 right now, in which case, you know, 16 times or 13 times would be around like 2,900, 2,800, something like that. Hey, Brian Forrest, good to see you, my friend. Happy 4th of July weekend to everybody. We are standing outside the Capitol Grill. Lisa says the city is placed for this weekend, 4th, 3-day celebration. British Gray is here. This is Good Friday evening, Tom. Welcome, British Gray. British Gray is joining us from Tampa, Florida. Always a pleasure to see you, British Gray. Days Work says, what's up, Tom? What's up, Days Work? Hold on, sorry about that. I keep looking over my shoulder. I hear someone shrieking behind me. But if you guys are enjoying this stream tonight, feel free to leave a like on the video and subscribe if you are new. We tend to go live about 5 days a week in New York City, also Miami. So feel free to join us there. We are now on 3rd Avenue and 42nd Street. We're going to cross the street, and then I think we're going to walk back up. And we maybe just maybe, end the stream tonight at the Hudson Yards. A quick, I guess, public service announcement for everybody on the stream. On the 4th of July, we may be streaming the 4th of July fireworks. I think that'll be interesting and a fun thing to do. So we may be in Greenpoint, Brooklyn for that, okay? So I'm not gonna say 100%, but I'm gonna say about 50%. We'll definitely stream the fireworks, but it's just gonna be depending on where I am that day. So we may be streaming them either from the east side of Manhattan or in Greenpoint, Brooklyn. So for those of you non-New Yorkers that aren't going to be watching it in person, like many of the New Yorkers in the chat, feel free to tune in, watch it here, hang out with us. FredX, good to see you. Yeah, Zabaton is like New York is full of crazies tonight. Let me know if you guys can hear a lot of wind noise, because I do not have the microphone plugged in, so let me know. Hey, MK is here. It's his first time in the stream. Good to see you, MK. Hopefully you're having a good start to your 4th of July weekend. We are here on the corner of 42nd Street and 3rd Avenue in New York City, overlooking the Chrysler Building. The building right next to the Chrysler Building is the brand new One Vanderbilt that has arguably one of the best observation decks to see the city, which I have not been to yet. But when I do, we may try to stream it. Maybe. We'll see. NBA Elias says yes, the wind noise. You know, maybe when we get back to Grand Central Station, we'll plug in the microphone. Hey, Andy S is here. What's up, Andy? Good to see you. Rock says, love your walks, brings back memories. Thank you. Appreciate that. So we did get some preliminary housing data out. So I just want to cover that really quick, because I think there's a lot of interesting perspective being thrown around here. And there's many talented analysts on Wall Street that you're seeing, as I like to call it, divergence in opinion here. So on one side, we're seeing extremes. So on one extreme, you're seeing analysts calling for an Armageddon-style housing crisis, like we saw in 2008. So that's one side. The other side says that even though interest rates are going up, and as we know, that 30-year fixed-rate mortgage is now right about, I think, 5.75, 5.8%. I think briefly at one time it touched 6%. So even though interest rates are going up, housing prices will continue to go up because there's just not enough supply. And so I guess we'll explore both options right now, but the reason why they're calling for that, which I think is a little bit interesting, is something that they call the perfect storm for housing. So here's what I mean. 2 weeks ago, we covered on the stream that housing starts, so single family housing starts, dropped 14% year over year. Now, if we understand the reason why we're seeing home prices go astronomical gangbusters, it's because of a lack of supply. Demand is still there, and we're not seeing any more supply come onto the market. We've been seeing a little bit of an uptick in supply, but nothing that would really drastically bring down prices. So if we say home builders are no longer going to build as many homes as before because of increased commodity costs, increased lumber costs, copper costs, you name it, and increased interest rates, well, isn't that just going to add more fuel to the fire? Because the thing that we need right now is supply. So it is a very big possibility that home prices may not come down. Because the number one thing that will make home prices come down is people selling and supply coming onto the market. And as of now, I'm not saying that's not going to happen, but as of right now, as of recording the video, we're not seeing crazy amounts of supply come onto the market. And we're still seeing consumers willing to buy homes near 6% interest rates. And just to give everybody a little bit of, perspective on that, if you wanted to buy a house that costs $400,000 this time last year, your mortgage payment, assuming you didn't pay cash, obviously, your mortgage payment now would be about $850 more. Just from that 1 year difference in the interest rate hike, because last year many people were getting sub 3% interest rates on a 30-year fixed rate mortgage. Now they're near 6%. Okay, so I'm sort of in the middle. I don't think we're going to see a huge correction here in housing. And the reason why I think that is because consumers are better capitalized, and banks had really strong underwriting practices this time around. And I know we talk about this ad nauseum, but I think it's important because I think many of you own a home, right? Or many of you are looking to buy a home. But in 2008, what really caused that crash is everybody defaulting on their mortgages at the same time. We're not seeing many people with adjustable rate mortgages or ARMs. We're not seeing banks give mortgages to anybody who applies, right? You know, like in 2008, they didn't even do any income verification. They didn't do any credit check or very little credit check. They were just passing out mortgages like they were hotcakes. Now the underwriting standards are extremely strict. So I was reading an article in the Wall Street Journal yesterday that sort of said the same thing. And they were interviewing a lot of realtors from across the country. And they were saying the only difference they're seeing right now and in the housing market in 2020 and 2021 is that the bidding wars are still going on. But the only difference is that you won't have 30 offers on a house. You'll have maybe 5 or 6. But I think lastly, to finish off my little tirade here, is that I believe 60% of all homes sold in the United States last month sold for over asking price. So I'll say that again. Over 60% of all homes sold last month in the United States sold over asking price still. And that's with interest rates almost up 100% from last year. So I'll give you guys one more view of the Grand Central Station right here, and then we will head out. Hey, Kat says my mortgage was 6.125. Then I did a refinance and got 4%. Ooh, very nice. Awesome, Kat. Yeah, so Kat, to your point, some select mortgage companies are going out of business, mainly because refinances are down almost 90%. And the reason for that is rates were, rock bottom, like literally free money. So as rates go up, why would somebody want to refinance their mortgage? Because the vast majority of people who bought over the past, let's say 5 to 10 years, probably got interest rates sub 4% anyway. So refinancing is falling off a cliff here. Hey, MBA Elias is Tom. The next housing crisis could be the rental market. Rents have been skyrocketing beyond belief. Yeah, so MBA Elias, that is a fantastic point. Really fantastic point. Interesting thing about that, MBA Elias, I believe there was an article, I think I may have shared it on my Twitter, if you guys want to follow @WalksWallStreet. I believe it was right here in New York City where the Wall Street Journal was interviewing many real estate agents that specialize in the rental market. And one of the things that they said that was a little bit surprising to me, this bike is so cool. Check this out. How unique is that? That's awesome. But anyway, sorry to get distracted there. One of the interesting things that these real estate agents were saying is that they're starting to see the behavior from the real estate sales market transition over to the rental market. So what do we mean by that? So let's review that. Let's review what we mean. Well, as we know, all of these bidding wars were going on to buy a single family home. We saw people doing crazy things like waiving inspections, writing personalized handwritten notes to the sellers, trying to convince them to pick them over other candidates. They're starting to see that type of behavior actually transition over to the rental market. So one of the stories, if I can recall correctly, and if you want to actually read the article, I believe I did post it to my Twitter, so you can follow @WalksWallStreet. I think it said something along the lines of they had a client apply to the rental application, and on the rental application they wrote a note that says we are willing to pay $100 over the renting price. So let's say if the rent was $1,000, they're willing to pay $1,100 a month if you accept this application on the spot. And they got accepted. So isn't that insane? We're starting to see this bidding activity start transition from the housing market or the sales to the rental market. Really, really feeling for people out there. I think it's something like 20 or 30%. A lot of my New Yorkers in the chat could fact check me on this, but I think it's like 30% of the rentals here. I'm blanking on the statistic, but you guys could look it up. But I believe that they just approved about a 3.4% increase in rentals in New York City in rent control buildings. Now, maybe somebody wants to do a quick Google search to let us know what percentage of rentals in New York are rent control, but I think it's like 30%, I think. Hey, Rock says, yes, borrowers have built tons of rentals at 3% now. They will get crazy ROI, return on investment. Yeah. Hey, NG, what's up? NG, good to see you. Happy 4th of July weekend and happy Friday. Welcome, welcome. James is here. Says, when it's tough to buy, that's when you get value. When it's easy to buy, that's when you wind up getting ripped off, maybe. Andy S says, hey Tom, we're gonna go to the Village tonight. Probably not tonight. I think we have to stay around Midtown. Yeah, Ruby says, beautiful shot here. Thank you, Ruby. I agree. Yeah, I'll give you guys one more shot of the Chrysler building and the One Vanderbilt, and then we'll make our way to the Hudson Yards. But this view is looking directly down or eastbound on 42nd Street. Hey, Marcelo Gillis here says, real gross domestic product decreased in 46 states plus Colombia in first quarter of 2022 as real GDP for the nation decreased at an annual rate of 1.6%. Sad, but how much longer will this situation keep up? Yeah, I mean, Marcelo, I think it really just has to depend on the Federal Reserve, right? I think it really just depends on the Fed. But to your point, like, let's say if the data comes out, right? If we get the GDP data out and it says, yeah, we had contraction, right? So not growth in GDP. You're going to see on the cover of the Wall Street Journal, it's going to be all over CNN, all over Fox News, that United States is in a recession. It's like the big boogeyman. But guys, recessions are necessary and are normal for functioning economies, right? It's ever since 2008, it's like we're not allowed to experience any pain. Recessions are actually very, very necessary. And those GDP numbers are actually a lagging indicator. Okay, and here's what I mean by that. Should we get the data out that says we are in a recession, that means we've already been in a recession. The numbers are just confirming what we're seeing. So it doesn't have to be like a big nasty boogeyman. Everybody, you're still waking up, you're still going to work every day, assuming you didn't lose your job, right? The point I'm trying to make is that life goes on. It's not like the world stops, everybody sits in their homes and they don't do anything. It just, the media tries to, I guess, propagandize one way or another. And the reason why I say that is because when those GDP numbers come out, it's just a confirmation that we were already in it. So it's a big possibility that time of doing stream right now, the United States is technically in a recession right now. Does that make sense? But it doesn't necessarily, what is this lady doing? But it doesn't necessarily mean that is a bad thing. I think recessions are necessary for economies to flush out unprofitable businesses, nefarious actors, things like that, over like irrational exuberance. Hey, Charlie Richardson, what's up? Good to see you. Charlie, welcome. Thank you for joining. Hopefully you're well, and excuse the wind noise here. It is rather windy tonight in New York. Hey, Elizabeth says, hey, Tom, happy 4th of July weekend. Thank you, Elizabeth. Much appreciated. Thank you so much. You know, let's stop by Bryant Park once again. You know, we started the stream, for those of you who are just joining, we started the stream at Bryant Park because they are doing the summer concert series outside. Beautiful jazz music playing tonight. So we'll check it out again. Hey, Davi Muniz says, hey, Tom, what do you think about the Movius surveillance app thing? Movius surveillance app thing? I'm not too familiar with what that is, but I'll take a stab at what I think it is. Is that the COVID tracing thing in China that is now allegedly being used to like track and control people that are trying to protest? Is that what that is? I'm not too, I could be mistaken, but I believe what you're referring to is that application that checks if you know, you're COVID positive or negative, but now they're actually using it to influence protesting. But that, I could be off there. I'm not too familiar, I apologize. Charlie Richardson says, hey Tom, I read an article and it said that a recession would not be as bad as 2008. Oh yeah, I mean, 2008 was like a systemic, system-wide collapse. But at the end of the day, there is one thing that concerns me here. And I think it's conclusive that we could say that we are in a liquidity crisis. Okay, I think that everybody would agree with that, that we are in a liquidity crisis here because 2 weeks ago, and it may not have been 2 weeks ago. Wow, this place looks really beautiful here. It may not have been 2 weeks ago because we've been streaming. I think we took about a week off on the stream. But the MBS, the mortgage-backed security market, went absolutely no bid, meaning there were no buyers. So the market pretty much froze up. So the liquidity is a crisis, liquidity crisis here. Hold on, let me cross the streets. Davy says, actually, I heard that some Wall Street firms are asking employees to install an app called Mobius so they can monitor their content. Okay, so I think that's like, right. Yeah, so I think it's called, you know, not for nothing, I think I used to actually sell a product like that. But, yeah, I know what you mean. I think, does that have to do with compliance of like Sarbanes-Ox or something? I think it's called multi-line. So if you put an application on your phone, it could essentially understand what position you work at in the investment bank and track your calls to see if you're calling other departments to give information to like the sales and trading department or something, or like share insider information. I think it's supposed to cut down on that stuff. I think you may be right. I think you're right. But there is also some app that I was reading about in China that supposedly it is being used to track the citizens and if they are protesting specific things. So it did end. So this used to be the summer concert series that was, I think it's supposed to go on from 8:30 to 10, but I think it ended now. Davi Muniz, yeah. So Davi, look up this product. If you look up multi-line, I believe in 2015, there was at a lot of the major telecom companies. So when I worked at a major telco, I didn't sell into the investment banks. I did know some people who were on that team selling into like the Goldman Sachs of the world, the Deutsche Banks. And I remember them talking about this product. They're like, oh, they're making us push this product called multi-line. And I think it has to do with some regulation of Sarbanes-Ox or something. But I do know what you're talking about. I do know what you're talking about. But I think they're definitely trying to cut down on like conflict of interest type stuff, insider trading, and making sure you're not leaking it to other departments within the investment bank, things like that. Because to your point, Davi, what has been a problem on Wall Street in the past is, you know, there's many departments within the investment bank, right? So if you're talking about investment banking specifically, You know, you could be in M&A or mergers and acquisitions. You could be in like a back office position, like an HR, something like that. You could be compliance, and you could be like sales and trading, or the S&T guys. So what you don't want is something like this happening, where you have one of the M&A guys saying, hey, this stock or this company may take over this smaller stock. You know, I think you should put in, you know, a short position on it or something like that, right? That's like sort of insider information. You're not allowed to trade off of that. So I think they're trying to combat that by some sort of multi-line solution. But let me look into that a little bit more. I think that's rather intriguing as well. Hey, Sabrina Ferris here. Good to see you, Sabrina. G-Shep says China has an app that tracks people if they have been in contact with other people who have the virus. Yes, I think you're right. Deja Vu has heard a great line today. Money is the measurement of discomfort. That is a great line. MBLI says, Tom, today about 2% of New York rental units are rent controlled, while roughly 50% are rent stabilized. Ah, copy that. Yeah, so that's what I'm talking about, rent stabilized. Very good. So I think that they just approved, and you guys, you know, please fact check me on this. Whenever I don't know a statistic 100%, I'll always say, please fact check me on this. I believe those rent stabilized units, I think they just approved about a 3% increase in rents. I think that's correct. I think they approved like a 3% rent increase. So there was some protests here. Hey, Pam is here. Says, oh my gosh, would love New York City tonight. Pam, come on down. We'd love to have you. So this is the, so this is not Bryant Park Grill. I was about to misspeak. This is called The Porch, which is sort of like a little bit of an outdoor bar / dining area here. Looking rather nice. Marcelo says, Tom, recession, at least here in Brazil, years ago, had been the worst thing that happened, says Marcelo. Junior says they have the best hot apple cider at the holidays in the park. They do, you're 100% right. And the best place is actually right here near the Joe Coffee. They have a little stand right here. It's called the Winter Village in Bryant Park. But you're right, they do have the best hot apple cider here. So here we are again, the backside of Bryant Park, overlooking One Vanderbilt. Sophie M says, looks like a beautiful evening. Hey, everybody from South Australia. What's up? Good to see you. Welcome, welcome. If you guys are enjoying the stream tonight, feel free to leave a like on the video. Subscribe if you are new. And I think we're gonna head downtown. I think we may head towards 34th Street. Oh, you know what? Actually, tonight we'll head uptown. We'll head towards Rockefeller Center. I think there's a big event going on tonight at Rockefeller Center. I think they've extended the hours of the sort of that skating rink, the roller rink there, Rockefeller Center. So we'll check out 30 Rock. Might as well. But I believe the summer concert series is going on June 13th through August 15th here at Bryant Park. So it starts at 8 o'clock p.m. So if anybody is visiting the city, this is a beautiful thing to do. That's also free. So if you're on a budget, if you're looking to do something for free, that's fun, come check it out. They have free live music, and I also think that they're going to start having movies here too. But if you rewind, if you want to see what it looks like, everybody, before you actually go yourself, if you rewind the stream all the way to the beginning, we actually started streaming as the concert was going on. So you can feel free to check that out. But now we are walking up 6th Avenue, Avenue of the Americas. Sabrina Ferris says, Tom, I can't believe I have no trips coming up until December. I go to London, I did a trip sooner. Ooh, so you're going to London, very nice. Yeah, I gotta get my passport situated too. I gotta figure that out. Junior says, Tom, what's the temperature like this evening in New York? So it's an extremely muggy, sticky and humid night here in New York. I think today was like 85 degrees. I think about 85 degrees tonight. But the only thing that was crazy was the humidity, probably making it feel a little bit hotter than it actually is. Ooh, everybody, check this out. Check out the view of the Empire State Building from here. This is the corner of 42nd Street. We're actually standing right outside of the Bank of America Tower here, so. NE says, Tom, do you have any recommendations for digital wallets? Current situation is freaking me out, especially after losing money on Voyager and having the rest with Gemini. Yeah, so NE, in my opinion, right? And again, this is very opinionated, but for me, I pull all of my Bitcoin to cold storage. So I actually utilize paper wallets. I'm not sure if you're familiar with that, but you can buy a hard wallet. I think like Trezor has one. But at the end of the day, for me, the biggest value proposition for owning Bitcoin is having it be unconfiscatable money, right? So if I leave my Bitcoin on an exchange, somebody else holds the private keys to my Bitcoin, right? I think it defeats the purpose, at least for me, right? Everybody finds their own value proposition in Bitcoin. Many people don't find any value proposition at all. But for me, I think that it's worth having about 5% of my net worth in something that is absolutely unconfiscatable, right? So I'm not necessarily worried about the price, where Bitcoin is trading at every day, but I think as a peace of mind to say, okay, something in the world that if I memorize my private keys, literally nobody, no government, no anything could take that or confiscate that away or tax it away from me. So in my opinion, I would pull it off the exchanges. I don't really leave anything on the exchanges, to be quite honest with you. Yeah, so Raise3 says Ledger. Yeah, like a Ledger Nano S, I believe they're called. Like a Ledger Nano S, I think. That's a good hardware wallet. Hey, Marcelo says TGIF, thank God it's Friday. Thank you for the responses. Marcelo, hopefully you have a good weekend over there in Brazil. Also for our Canadian viewers, happy Canada Day to you guys. Nano S or Nano X is Raise. Yeah, maybe Raise, you can give your 2 cents on which one you think is better. I personally don't utilize them, but...
Taxi!
Yeah, Bagels and Walks is great shot. Beautiful shot of the Empire we got here. Gregory says 9.5. Yeah, I think this is probably maybe like a 9.2, 9.3. Hey, Fire Lily is here. Good to see you, Fire Lily. Happy Friday to you. Here now says EPD, environmental product declaration. Does it really matter to the investor? I guess you're talking about that ESG stuff. At the end of the day, I think the ESG, which I believe stands for environmental and social governance, many people says it's like a marketing ploy as a way for Wall Street to garner more fees out of customers, which I think I agree with both. And I know that's sort of like, okay, you're trying to play the fence here. But at the end of the day, if you look at a lot of these ESG ETFs, so I'll give you guys a little bit of homework. And I think we talked about this on another stream when we covered the actual inner workings of an ETF. And the biggest issue that I have with many of them is that if you look at a lot of these exchange traded funds that are marketed to the average retail investor, if you look under the hood of these ETFs, they have a very, very similar beta to like the broader market index. So here's what I mean by that. if anybody's confused by that terminology, which means they tend to track very similarly. Like if the S&P 500 is up 1% on the day, those particular ETFs may be up like a little less than 1% or a little more than 1%. And the reason for this is because they'll say, you know, whatever it is, and this is probably not an actual name of one, but I'm just using it as an example. It'll say JP Morgan ESG ETF or ESG Environmental Conservation ETF. And if you look at the top 5 holdings in that ETF, if you look at the prospectus that nobody reads, it'll say Apple, Microsoft, and Tesla, which is just like the top 3 biggest companies in the S&P 500. So the top 5 stocks in those ETFs will just mimic the index. And then all the way at the very, very bottom of the ETF, in many cases, you'll have like, you know, a couple solar companies. So again, what they really do is they just use these ETFs to say, oh, you're buying an environmentally friendly and a socially conscious and a social justice warrior, you know, ETF. We're gonna bang you over the head with a 2% management fee or a 1.5% management fee because you're invested in clean energy, right? So they use, and look, I'm not saying everybody does this, but from a lot of the, you know, a lot of people send me emails on here asking me about things, and I can't give out financial advice, but sometimes I look at the ETFs you guys send me, and one of the ETFs in particular was this green energy one, and I'm like, this is just like buying the S&P 500 pretty much, right? And it may have like 2, you know, solar stocks in it, but the only difference is that if you bought the S&P 500, you probably wouldn't pay egregious management fees. But with these other ETFs, you're gonna pay like 2% or like 200 basis points. So here's my old office, everybody. I used to work out of this office for many years. Yeah, Andy S is like finding a parking spot in Midtown is like winning the lottery. True that. Hey, Sally is here. Welcome, Sally. Yeah, so my cubicle actually used to be right here, this corner one right here. And before the pandemic, I would see the same guy every morning. We would wave to each other. He'd be in that office right above Chick-fil-A. I used to work out of 1166, which is the Marsh McLennan building. You know, I'm not sure if they're still there. I do think they are. But we used to have D.E. Shaw in our building, which is one of the largest quantitative hedge funds out there. Hey, Lady Sarita is here. Good afternoon, Lady Sarita. XOXX Bob's Citadel has bought over $600 million in Brickell properties so far this year. Hey Bob, good to see you, my friend. Thank you for joining the stream. Yeah, we talked about that a couple streams ago, Bob. I think you're right. You know, something really interesting about Citadel. So for anybody who doesn't know, we'll do a quick recap. So Citadel Securities is one of the largest hedge funds. Also, they are very big in market making activities on Wall Street. Big quantitative shop. They are recently brought to light as being very controversial in the payment for order flow space, which we've reviewed almost ad nauseum. If you guys want a more in-depth analysis on really what payment for order flow is and the deep dive in the mechanics of that, check out our free Behind the Street newsletter. If you type !news, NEWS, in the chat, it'll drop the link. But Citadel Securities has announced that they are moving from their flagship location in Chicago, Illinois. They are now moving to Miami, Florida. And this isn't an anomaly. This is not an anomaly. Many businesses are leaving Illinois, the state, mainly due to taxes. So you saw Caterpillar leaving Illinois, going to Texas. You're seeing Citadel Securities leaving Illinois and moving to Miami. as well as New York. I believe they are moving about half their staff to Miami. The other half will be in New York and other locations around the world, obviously. But yeah, Ken Griffin made that announcement, I believe, about 2 weeks ago now. And the reason why I think it's significant is because I believe Ken Griffin, which is the CEO and founder of Citadel Securities, he actually, really great American success story. He went to Harvard, and he actually started Citadel out of his dorm room in Harvard. Pretty interesting. But he was, I believe, don't quote me on this, but I believe he was the single biggest taxpayer in Chicago and the entire state of Illinois. So that is going to be a big blow to the tax revenue of the city and the state. Hey, Palmetti, it's good to see you. Ed Dunkel says the Fox News building. Davi says Miami apparently is the place to be right now, is it? Well, I think it's one of the more business-friendly cities, right? And I think the reason why it's become so popular as of late is because think about what happened during the pandemic. You know, I'll sort of give you my story. So I worked in tech here in New York City, and in New York City, everything was closed during the pandemic. So I was essentially banging my head up against the wall in my apartment because I worked 12 hours a day, and then there was nothing to do because all the shops and the stores were closed, and I wasn't going into the office, I wasn't seeing my coworkers, I wasn't seeing my clients face to face. So if I had to choose to work remote in New York City when everything is closed and there's 2 feet of snow on the ground and the winds are whipping and it's dark every day, or if I could choose to work remotely in Southern Florida when it's beautiful, bright sunshine every day and everything is open, and I don't have to pay state income tax, which one am I going to do, right? So I think you saw a lot of that activity going on, right? And I don't want to sort of light off a massive firework, a political firework in the chat, pun intended, due to the 4th of July weekend. So I don't really want to set off a political firework in the chat, but I think that's probably why a lot of people have migrated to Miami. But as you could see, I think a lot of people are starting to come back to New York. You know, I split my time about 50-50 between New York City and Miami. But as I moved to Miami, I sort of learned more about it. And it's a great city. It's a fantastic city. A lot of cool people. Very different type of vibe. So, you know, a lot of different tech firms, a lot of finance is moving to Southern Florida. But that's not to say that cities like New York are going to go away. I do not think that that's the case. But here we are, everybody, outside of Radio City Music Hall. Beautiful night outside of this fountain right here. Hey, Frank Gonzalez. What's up, Frank? This is Tom. Good evening and happy holidays in advance. Thank you, Frank. Right back at you, my friend. Bagels and walks. Beautiful fountain lighting, I agree. Hey, Carmelo, so salute, my brother. Great to see that you're streaming. Hey, thank you for being here. Thank you, Carmelo. Penelope says, Tom, you have made it work for you. Kudos. Yeah, thank you, Penelope. So Penelope also lives in another very business-friendly state, I should say, Tennessee. You know, you saw mass migration to places like Nashville, Tennessee as well. You know, I don't think big cities are going to die. I just think that people will be more mobile. I think you'll see people having 2 or 3 apartments, you know, maybe 2 or 3 homes, because they have that flexibility, you know, maybe to work 50% of the time in a great city like New York, 50% of the time in a great city like Miami and LA and so on. But everybody, check out this line. So this line is for Adele's Famous. It is by far the best halal food in New York City by a mile. So if you're coming to visit New York, please come to West 50th Street and 6th Avenue. They're always here starting at about 6 o'clock at night, but check how long the line is. Okay, I always say if the line extends past the 3 flagpoles, you're gonna be waiting for 2 hours. Anything past that, probably about 2.5 to 3. it is that long of a wait, but I do think it's worth it if you haven't had it in a while. Hey, Jimenez says, I hope tax money from New York and Texas isn't going to pay to keep Miami above water. I hope tax money from New York and Texas isn't going to pay to keep Miami above water, says Jimenez. Ray says it's packed. Yeah, it's packed. Sabrina Fair says, Tom, my husband is yelling at the telly. He's a halal guys, as you know. Yeah, I mean, look, halal guys is decent, but it's not as flavorful as these guys. So you got to check it out. Adele's famous. Halal guys, if you keep walking up 6th Avenue by the Nürburger Berman building, past the UBS, it's right outside of the Hilton hotels. It's all right. It's good. I'm not going to say it's the best. It's not Adele's famous, but it's a solid spot. I think it's a solid spot nonetheless. Jessica 1999 says halal guy is old and sold out in terms of reputation. Interesting. Yeah, Two Harbors says they should put another stand with all that business. I agree. Wanye Cass says, hey Tom, how are you tonight? I'm doing good. I'm doing good. You know, we took off about, I think, 4 days. But the 4 days felt like an eternity. So it's good to be back streaming for everybody. You know, as any salesperson would say, the end of the month and the end of the quarter is insane. So not only this week was it the end of the week, the end of the month, and end of the quarter, or not only was it the end of the month, but it was also the end of the quarter. So very, very busy. We should be back to our regular scheduled programming in terms of streaming. So stay tuned for that. Really quick announcement for those of you who are just joining. On the 4th of July, so this Monday, okay, we should be streaming the 4th of July fireworks from Greenpoint, Brooklyn. Okay, we should be in Greenpoint, Brooklyn. We will 100% be streaming the fireworks. I'm just not sure where exactly yet. It's looking like it'll be Greenpoint, Brooklyn. If not, we should be on the east side of Manhattan streaming them. I just gotta scope out the different spots and see what's probably gonna be the best view. But please join us for that. I think it's gonna be a fun stream for Independence Day. But here we have Radio City Music Hall. Hey, Andre Almar says, geez, it's a long line for paying for a plate of food. Now I know why people are leaving New York City. Well, to be honest, I've waited about an hour and a half for that. I've waited about an hour and a half, I think, max. So if you want to know a little bit of a hack to get Adele's fast, only go on days that's pouring raining or it's below freezing. If it's below 32 degrees Fahrenheit and it's pouring raining or it's snowing or anytime the weather's horrible, that's when you got to go here because the line is going to be short. But if it's a beautiful night like this, expect to bring your sleeping bag. Hey, Bottomless Coffee, what's up? Says many popular restaurants in New York City also have a 1 and a 1.5 hour wait for a table. Yeah, so Bottomless Coffee, you're 100% right. So everybody, I got to give you an update. How could I forget? Bottomless Coffee, thank you for reminding me. I went to one of the best Korean restaurants I've ever been to. So it's on 31st Street, right next door to Take 31. And it is called Her Name is Han. So Her Name is Han. And I went there last night and it was arguably one of the best meals I've had in a while. On a scale of 1 to 10, it's probably about a 9.3. It's that high. The place was absolutely fantastic. So if you guys are looking to get some really, really good Korean food, please check out Her Name is Han. And it is right next door to Take 31, which is also another really good Korean restaurant. But the thing is, like Bottomless Coffee said, you gotta make a reservation in advance or else the entire restaurant is booked out. Just to give you an idea, I booked the restaurant maybe about 2 or 3 days ago and the only slots they had to eat were about 9:30 at night, which I don't mind. It was a nice late dinner. But if you want to eat during like normal regular time, I think you're probably gonna have to book like 2 or 3 weeks in advance. Hey, Brandy Garden, what's up? Says, I'm from Illinois. This state is going downhill. Ooh, that was a big roach. Is still our governor in November. I'll be moving out of the state. He is the worst governor in the state. I'm voting. Yeah, so isn't he one of the heirs of that big hotel brand? I forget. I could be mistaken, but wow, everybody check this out. Look at all the American flags here. Love that. FredEx, her name is Han, is about to get that Walks on Wall Street bump. I mean, they deserve it. I mean, you guys know, if a restaurant is good, you know, we're just coming out of this pandemic, I'll shout it out. I'll recommend it. But thank you for that piece of information on Illinois, Brandy. Thank you for sharing that with the group. Little guy Jerry, the Pomeranians. This was one of our last walks through New York City. Totally my perspective. Hey, thank you, little guy. Appreciate that. NBA Elias, Tom, have a halal on us. Awesome stream today. Hey, NBA Elias, thank you so much for the donation. Very, very kind of you. Thank you so much for supporting the channel. I appreciate it. Thank you, NBA Elias, and happy 4th of July to you, my friend. Hey, Dusty Cole says, Tom, in the 1960s, real family income went up 41%. Since 1979, real family incomes have gone up 8%. Yeah, personal incomes have been stagnant, and they have not been keeping up pace with inflation. You're 100% right. But NBA Elias, once again, thank you so much for the donation. Marcelo Gill says, Tom, what time will you begin your 4th of July live stream? I'll let you know tomorrow. So tomorrow I'm going to go scope out the location where I'll be streaming. But we should be starting about 20 minutes before the fireworks start on the 4th of July. So about 20 minutes before the fireworks actually start blowing off. Man, they did a great job with all the American flags here. Love that. Jimenez is Tom, the percentage of Americans in the middle class peaked in the 70s. Percent of Americans working peaked in the 90s. Yeah, you know, you're right. We talked about that labor force participation rate. That's extremely important. Let's take a look at all the people roller skating. So this is right at Rockefeller Center, 30 Rock. Alice is here. Good to see you, Alice. Good to see you, Jessica, 1999. Hey, Deadpool. Good to see you. Melissa 2087 says, how much is it to roller skate there? Would love to do it. You know, I'm not sure, but I think you can rent the roller skates because it seems like everybody has the same roller skates on. If I had to guess, I think 20 bucks, probably 20 bucks. Bagels and Walks is like, can you stream on the roller skates? Probably not. Well, actually, probably. We could stream on the skateboard. We could probably make it work on the roller skates. Yeah, Bob is like $20 to skate. Must be inflation. I know. I mean, that's if I had to guess. Says I'd pay to see Tom roller skate. Wow, Melissa, nice. I was right on the money. My favorite thing about Rockefeller Center is all these American flags right here. Hey, Philly says, hey Tom. When's the last time you were on the board? I think we were on the board about a month ago. We got to get the board back. I've just been really busy, but the board will be back this summer, I promise. Hey, Bezita Lopez, good to see you. Welcome. Good to see you. Thank you for being here. shot of the night right here. Let us head up. Yeah, Marcellus says, Tom, do you care about the copyright? Not really. Not really. I know some people do, but I feel like if I mute the music, it's not gonna, you guys aren't gonna get the real experience on the stream. Yeah, but it looks like a good time. I guess it's 20 bucks. Which actually is not bad. It's not too bad. Hey, Marty Lewis, what's up? Marty, thank you for joining. So guys, check this out. There's like an eye on 30 Rock. I think it may be for that new movie Minions that is coming out. So like the eyes moving all around right here. Hey King, thank you. Philly says, Tom ain't doing this for the money, he's doing it for the people. Alright, what do you guys think of these shoes here, these Cole Haan shoes? I kind of like these ones, to be honest. Like boat shoes, I guess. Yeah, the NBA. It's like Big Brother's watching, I know. Bruce Wayne's like boat shoes, where's the boat? Well, I did take the Staten Island ferry. Oh, I forgot to tell you guys, I took the Staten Island ferry for the first time in a long time. You know, and that prompts me to say, you know, maybe tomorrow on the stream we'll start down near Wall Street. We'll jump on the Staten Island ferry. We'll go to Staten Island, we'll come back. We'll check out the views. It's actually pretty nice and it's free, so. Hey, Manthony18 is here. Good to see you, Manthony. Welcome. Happy Friday night to you. Happy 4th of July weekend. Lewis, welcome. Yeah, Bezita Lopez is like for the Minions, yeah. You know, I was watching the, or was it the late night show with Jimmy Fallon? I forget what the name of his show is. I think it's, the Tonight Show with Jimmy Fallon. And I think they had that guy Steve Carell on there promoting that movie. So I think that's why you have that eye up there. Western Mass Dave says, Tom, the Staten Island Ferry is one of my favorite things to do. Please do it on the stream. We may do it tomorrow, Western Mass Dave. You know, I did it 2 days ago. It's beautiful. Really beautiful, and it's free. So, here, I'll give you guys one last look at Rockefeller Center here. If you guys enjoyed the roller skating, if you guys enjoyed that, feel free to leave a like on the video. Subscribe if you are new. Hey, Philly says, born and raised in New York and still never been on the ferry. You know, I think the only other time where I went on the Staten Island ferry is I was late for the bus because we were actually playing a soccer game against CSI, which is the College of Staten Island, and I was late for the bus, so I had to take the Staten Island ferry and meet them at the College of Staten Island. That's the only other time I think I've taken it. But it was cool. I just was like, you know what? I haven't done that in a while, might as well. It's a pretty good view of the Statue of Liberty too. So if you don't want to pay to go all the way to the Statue of Liberty, a little bit less crowded, I think. It's a good little hack right there. Hey, NMB 045. This is Happy Canada Day. Yes, Happy Canada Day to you, my friend. Also to Mark Davis and everybody joining us from Canada. Good to see you. So NMB 045, we were briefly talking about the bond market this week. You know, we didn't really have enough time to cover it. Obviously, I took about 4 days off. But we got a little bit of a bid again in the bond market. We have that 10-year US Treasury yield now below 3% again. That 30-year fixed rate mortgage came down a little bit, and we did get some data from the housing market, even though rates are up about 100% year over year. Demand is cooling a little bit, but from many interviews or many, responses from prominent and successful real estate agents across the country, they're saying the main difference is, before there was about 50 offers on one house, now there's about 5. But here's an interesting statistic. I think about 60% of all homes sold in America last month. And I'm gonna get to the exact statistic on this. I think I posted it on my Twitter. So if you follow @Walks Wall Street, I think 60% of all homes sold in the United States last month were above asking price still. So I guess that begs the question, will demand cool off enough for some supply to come on the market? But if you look at the data, supply is still at all-time record lows. Supply did tick up a little bit, but here's some concerning news out of the home builders. So housing starts last month fell 14% year over year, which is a little concerning. Hey, Marcelo, here we have UBS. So Marcelo's daughter works right here at the investment bank at UBS. Hey, the Papa Smurf, the OGs, is my brothers and sisters on a call. Salute, what's up? So Papa Smurf is joining in from the FDNY. We love it when the FDNY joins the stream. So thank you guys for keeping us safe. Especially this weekend, this 4th of July weekend. So hopefully you guys will be safe. And thank you for tuning in, my friend. This is Nürburger Berman. Zone says, Tom, does data show how many homes were bought by institutional investors as opposed to individuals? Yes. Yes. So in next week's Behind the Street newsletter, on Tuesday, I'm going to be emailing that out. There's actually going to be a segment of the newsletter talking about just that. Talking about institutional ownership and institutional exposure in the single-family housing market, as opposed to individual investors like you and me that may own like 1 to 5 properties. But yes, we will break that down, and that is very important to look at. Extremely, extremely important. Hey, Lewis says, yeah, 811 people on the stream tonight. Thank you everybody for joining. Hopefully you are enjoying it. So this is right outside of the flagship Hilton Hotel. But this is also where the very famous Halal Guys is. Not as good as Adele's famous, but it is solid. It's a solid place. It's a solid place nonetheless. It's funny. Everybody will crowd the 6th Avenue side of Halal Guys. But there's the same exact company right here with no line. So might as well go over here. Hey, Ramsey is here. Says, hey Tom, what's up? Good to see you, Ramsey from Egypt. Welcome.
You gotta think of it, 1770s.
But halal food is some of my favorite food. It's up there. Halal food is up there with like Korean food, Italian food, obviously. It's up there. Hey, Long Island Duck. It's good to see you. This is Go Figure. Welcome. Yeah, Lady Sarita. This is New York City. Seems busy but quiet. Where are the yellers? Well, we had a shrieker earlier on the stream. So we're gonna walk up to Billionaires Row, which is 57th Street. I want to end the stream outside of Carnegie Hall, because usually we have a lot of people coming out at this time, exiting all the shows and whatnot. Hey, Julia A says, what would I give for a street vendor hot dog right now? Come to New York City. Hey, Paul, thank you so much for the $3 donation. This is spend wisely, no Bitcoin. All right, I could, I'll obey those commands, Paul. But Paul, thank you so much for the kind donation. Hopefully you are enjoying the stream on this 4th of July weekend. Hey, Roberto Torres is here. Says, good evening. Have you ever been at 8th Avenue, 42nd Street? I went there the other day, it was scary. Yeah, so 8th Avenue, 42nd Street, what is that? That is the Port Authority bus terminal. That is a horror show, you're right. That is not the best location. I would probably try to avoid the Port Authority. Am I right, everybody? Yeah, Port Authority is there, 42nd Street and 8th. Yeah, I mean, see, you know, the thing about the Port Authority is there's a lot of drug use and homeless people. So I would definitely, you know, stay away. But right now we are outside of the Alliance Bernstein building. But there is also a very, very notable hedge fund right in this building called Fortress Investments. And we talk about Fortress Investments a lot on the stream because Michael Novogratz used to be a partner, I believe, or a portfolio manager, PM at Fortress, in which case he broke off to try to start his own venture, Galaxy Digital Assets, in which case he headhunts investment banking talent to try to help onboard institutional investors to the Bitcoin and cryptocurrency markets. But Michael Novogratz was a former managing director at Goldman Sachs, then went to Fortress Investments, which is right in this building, and then he is starting his own entrepreneurial venture with Galaxy Digital Assets, in which case they try to go out and recruit extremely talented investment banking talent. Maybe you have experience in sales and trading or in M&A or just working at the investment bank in general. But Galaxy Digital Assets tries to onboard institutional clients to Bitcoin and other digital assets, I guess you could say. NMB 045 says, yes, I was walking in that area, not knowing what to expect. Philly says, bus terminals always attract the anti-social types. Susanna says, New York has the most cities, buildings. Not too sure about that. Mike 34 says, how is that area to live, 55th and 6th? 55th and 6th. Very nice. If 55th and 6th, we just passed that. Yeah, really, really nice here. Well, 57th Street and 6th Avenue, which we are approaching now, is coined Billionaires Row. Well, I guess you can technically say all of 57th Street is Billionaires Row. But we're about to approach it now. So you're gonna have Central Park Tower You're gonna have 157, and you're gonna have 432 Park Avenue. And also the Steinway building, I'll show you guys. Beautiful additions to Billionaires Row. Hey, Julia A, this is my dad. Worked on 33rd Street and 3rd for over 25 years. Wow. Maybe he had a really good view of the East River, or maybe even the Empire State Building too. He probably had a really nice view of the Empire. Hey, Juan Davids, is it normal that I went to New York last year in December, and now watching this video I want to go back? I think that is quite normal, my friend. I would actually say it's abnormal if you're watching this video and you're like, you know what, I really don't want to go back to New York. I think that would be a little bit of an anomaly there. So welcome back, and hopefully you come back soon, please. So right here, this building behind 157 is Central Park Tower. This building, which we talk about all the time, 157, I believe billionaire Bill Ackman, which is the founder and owner of Pershing Square Investments, owns a unit in that building. And this one I think is the newest addition, which is the Steinway building, which I believe every single floor has its own unit. You know, 157 also doubles as the Park Hyatt Hotel. So if anybody is looking for a really, really nice place to stay, like let's say you're gonna be here on business or something like that, or you know, you have a big budget to spend, I would highly, highly recommend staying in the Park Hyatt, because it shares all of the amenities with 157. So it's essentially like you're staying in one of the original Billionaire Row's buildings. Extremely, extremely nice. So this is the Steinway building. This is 111 West 57th Street. So this is going to be the grand entrance. It is not yet complete. It should be complete rather soon. But check out how tall this building is. Hey, photos from around New York. Good to see you, my friend. Thank you for joining the stream. We are taking a walk on Billionaires Row here in Manhattan. So you know what? Let's actually cross the street, because I'll show you guys what I'm talking about. So if you want to stay somewhere really nice, now it is rather expensive. It's extremely, extremely expensive. But if you want to stay somewhere nice, check out the Park Hyatt. Beautiful dog here. 10 out of 10 on the dog. Yeah, it looks like it disappears in the sky. You're absolutely right. Check out this bar here. Hey, James Stewart says, yo, Tom, how long will this bear market last? James, hopefully not too much longer, but, you know, we did cover a little bit of good news, James. So here's the good news. Okay, this was the worst quarter for the stock market since the 70s. Now, that's not the good news. The good news is, usually, if the stock market, if we look back, hold on, I'm just waiting for the West Virginia guy to pass here. The good news is, if we look back throughout history to the 70s, whenever the stock market is down about 20% in the first half of the year, the second half of the year, we tend to see about a 24 to 25% rally across the board in the major indices. So I'm talking about the S&P 500, the Dow Jones Industrial Average, and the NASDAQ. So a lot of economists on Wall Street and a lot of analysts are saying, wow, this market is really, really an anomaly. But it's actually not. And the reason for that is because not only is the market performance rather poor, but we're in a midterm election year, and we've talked about this ad nauseum on the stream, that during midterm election years in the stock market, the first quarter and the second quarter of the year tend to be the worst performing quarters for the market. And actually, after midterms roll around, you actually start to see positive stock market performance. Now, that's not a guarantee that this market's going to turn around, but here's what I think we could see happen. Here's what I think may be a possibility. 142 West 57th Street, I work out of here sometimes. There's a nice WeWork building there. But here's what I think what we could see happen. I think you're going to see the Federal Reserve continue to raise interest rates. I think you're going to see a continuation in the unwind of that balance sheet. But after midterms and after, we've had extreme valuation compression across the board, I think you're going to start to see them take their foot off the gas a little bit and potentially start quantitative easing. Because right now we are in a quantitative tightening cycle, in which case they are removing the money supply from the broader economy of the market, and they do that by letting assets roll off their balance sheet. If the Federal Reserve wants to flood the market with liquidity, what they'll do is they'll start to buy U.S. Treasuries, they'll start to buy mortgage-backed securities, in which case it adds money into the economy, thus stimulating the economy and whatnot. So I think we could be setting up for a big opportunity here for a decent sized rally towards the end of the year, especially if the Republicans take both houses of Congress. Because if we look back throughout history, the market tends to perform the best. So the best stock market returns on record happen when we have a Democrat as a president and both houses of Congress are controlled by Republicans. And I think that, not to get too political, I'm just trying to give you the data here, but if you look at what it's looking like in this midterm election cycle, it looks like a huge red wave, red tidal wave here. So it's very possible that the Republicans will control both houses of Congress, and if that is the case, that will be by far the best outlook for stocks historically. So once again, the best market performance for the stock market is when we have a Democrat as a president. So we have our good friend Joe Biden, President Joe Biden. And then if we have a big red wave, this could be setting us up for the best scenario possible for market returns. So hopefully that answers your question, but I don't really know. I think we're just gonna have to wait for the Federal Reserve to continue to give us some data that they'll start easing. But as of now, Fed Chair Jerome Powell said the number one goal of the Fed is to kill inflation. So we'll see. Deborah says, don't agree about the House and the red wave. That's okay, we don't have to agree. But if you do look at the data, the stock market performs the best when we have a Democrat as a president, which is our good pal Joe, and Republicans in both houses of Congress. And the reason for that, I'm not big into politics. Again, I'm looking at this as a financial analyst. I'm not looking at this as a political analyst. I honestly couldn't care who's in the White House or who's in Congress. Literally don't care. But if we look at the data, that is the best setup. So if we have Joe Biden in as a president, and we have Republicans in control of both parts of Congress, stock returns tend to be extremely positive. And there's a lot of speculation, Deborah, as to why that is. And I don't know why that is, but I'm going to give you my best shot. So I'm going to give you why I think that is, but this isn't exactly why it is, because nobody really knows. Here's why I think that is. The reason why I think the stock market performs the best under a Democrat as a president and Republican control both houses of Congress the reason why I think that is because that means pretty much nothing will get done, right? There'll be no new rules, no new regulations, no increase in corporate taxes, because anything that the president tries to do is just going to get shot down by the Republicans, and vice versa, right? So I think the market doesn't really like uncertainty, and right now, what more uncertain can you get about this world? You know, you have war in Ukraine, you have inflation ripping people's faces off. You know, I mean, what more uncertainty could you possibly get? So but everybody, we are coming up to the end of the stream tonight. I want to thank everybody for coming out. Thank you for joining the stream, even though we've been off for about, I think, 4 days. We took a break for about 4 days. So if you like the stream tonight, feel free to subscribe to the channel. We will be back here live, 8:30 Eastern Standard Time tomorrow night. So we'd love to have you join us. We'd love to have you come back and join us on the stream tomorrow as we walk around New York City. I want to wish everybody a very, very happy 4th of July weekend. And this Tuesday, we will have, I believe, the 23rd edition of the Behind the Street newsletter coming out. So please, if you have not signed up yet, if you type !news, NEWS, in the chat, the Nightbot will drop the link to a free financial newsletter where I write about not only the US equity markets, but emerging markets, fixed income. We cover it all, just like we talk about here on the stream. So if you want to stay connected there, feel free to sign up for our Behind the Street newsletter. But until then, everybody, I will see you later. So thank you for joining. Jay Nibs, thank you so much. Jason Francis, DW, appreciate you very much. Paul Medes, thank you for joining. And if you want to join us over here at the Behind the Street newsletter, if you scan the QR code on your screen, it'll bring you to the link. If you punch in your email, you will be staying up to date on all of my thoughts on the financial markets, where we continue the conversation on from now and the stream. So feel free to check us out, and every other Tuesday after the market closes, I will send that to your guys' inbox. So Ryan Royal, thank you. Iowa Oak, Samantha R, Day's Work, Roy S, Joan, Kathy Lyons, Samantha R, Ruby Falcone, thank you so much, my good moderator Ruby. Photos from around New York, Marty Lewis, Fred X, all of our friends. Happy 4th of July weekend, everybody. Let the free markets roll on, and we will see you tomorrow. And to the mighty bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. We'll see everybody right back here, New York City, 8:30 Eastern Standard Time tomorrow. Take it easy.